Ladies and gentlemen, my name is Greg McCloskey, and this is a Forex quick look at the Aussie versus US dollar. Let's go back a week ago, and last Friday the price was making new highs. This high price reached up to just short of the 0.6900 level, and we moved above this upper channel trend line, so things were looking really bullish at this time. But then the price started to dip on Friday, and we closed below the topside trend line. And as you can see, that tilted the bias back to the downside. Now, it wasn't until this day right here, this is Tuesday, where the price fell below the lower end of that channel trend line. We also fell below the 100-hour moving average, and that opened the door for a move to the 200-hour moving average. Then we broke below that, fell to this swing area support, and waffled back and forth between the 200-hour moving average and this swing area for the most part. Before in trading here today, we saw another move to the downside. So these moves start at some point, and then they sort of gather steam. And from a technical perspective, the technical levels did a really good job. In particular, the 200-hour moving average here, all holding resistance. That led to the move to the downside, and then getting below this swing area and trading here today sort of opened the door, and then we moved below it here and here and tried to move lower, but it wasn't until today where we saw increased momentum, and that sort of opened the door to the downside. Now, more recently, outlining other technical levels that the market has broken through, in particular, the 38.2% retracement of the move up from this low to this high. We also moved below the 100-day moving average. That's the blue line in this chart. You can see once we move below that level, the sellers started to lean against that level at 0.6713, and that level is going to be a key level going forward. If the price can stay below that level going forward, the sellers remaining more in control. And then more recently, we moved below the 200-day moving average at 0.66913. Stay below that level, and it's even more in favor of the sellers. I would be remiss if I didn't mention the 50% retracement as well. So all these levels are being taken out of play, and the sellers are taking more control on each move below that level. Going forward, what it would take? It would take a move back above the 200 and 100-day moving average, I would say, to increase the bullish bias once again. So we need to get above these two levels. If we do that, then we could see a rotation back higher, and the pressure is off the sellers. But until then, the sellers remain more in control. On the downside, we have this swing area right through here where we had a number of different swing highs, and then it became swing lows through here before taking off to the top side. That level area comes at 0.663743. That'll be our next target on the downside for the Aussie versus US dollar. But stay below the 200-hour moving average, stay below the 200-day moving average, stay below the 100-day moving average. Sellers are more in control. Greg McCloskey from Forex Live. Good fortune with your trading. Bye-bye now.